No bills have been introduced. The House comes to questions for oral answer. Question number 1 in the name of Dr. Jian.
Thank you, Mr. Speaker. My question is to the Minister of Finance and asks, what changes has the government made in recent years to make tax system fairer and to help families and businesses get ahead?
Speaker.
Order. Honourable Dr. Jonathan Coleman.
Mr. Speaker, on behalf of the Minister of Finance, in Budget 2010, the government introduced across-the-board income tax cuts and better targeting of support programs such as Working for Families. The package reduced tax on work and savings for every taxpayer and increased taxes on consumption and property speculation. After-tax incomes at all levels of taxable income were immediately increased by more than the increase in GST. Someone on the average wage of around $50,000 at the time was immediately about $15 a week better off as a result of the tax changes. And a family with 2 children on the average household income of $76,000 in 2010 was about $25 a week better off. The changes also made the tax system fairer. 2/3 of the cost of the income tax cuts in 2010 went into reducing the bottom 2 tax rates. So someone earning $48,000 a year now has a top tax rate of 17.5%.
Supplementary question, Dr. Jian.
What steps has the government taken in recent years to ensure property speculators and other investors trading for a profit pay their fair share of tax, and how much is this estimated to have increased Crown revenue?
Speaker.
Honourable Dr. Jonathan Coleman.
On behalf of the Minister of Finance, the government has significantly tightened the tax system to ensure property speculators are paying their fair share of tax. Budget 2010, for example, denied depreciation deductions for buildings such as rental housing. It tightened rules for loss attributing qualifying companies. It prevented property investors from using rental losses to inflate their Working for Families eligibility and payments. It also significantly increased inland revenues funding to target property speculators who were avoiding tax. And it removed opportunities for income earners in the top personal tax bracket to claim losses on their property investments. Together, these measures are expected to generate at least $2.48 billion in additional revenue over 4 years. That's significantly more than another capital gains tax full of complexity and exemptions would raise over that period.
Supplementary question, Honourable David Parker.
Has he read Westpac's chief economist Dominic Stevens' analysis that a proposed 15% tax on capital gains on investment property, excluding the family home, would have a significant effect on the net present value of residential property investments and so would affect new investment decisions? And if so, why did his associate on national radio, Stephen Joyce, this morning say it would have no effect on the housing market?
Honourable Dr. Jonathan Coleman.
Particular report, but what I do know is that with a growing economy, the last thing New Zealand needs is another tax, and the electorate knows that as well.
That's right. Supplementary question, Dr. Jian.
How significantly do the current income tax and income support systems redistribute incomes for New Zealand households?
Honourable Dr. Jonathan Coleman.
Mr. Speaker, on behalf of the Minister of Finance, the income tax and income support systems provide a significant amount of income redistribution. For example, the Treasury estimates that households earning over $150,000 a year, the top 15% of households by income, will pay 49% of income tax this year. But when benefit payments, Working for Families, paid parental leave and accommodation support is taken into account, these 15% of households will actually pay 74% of net income tax, and that's before NZ Super is taken into account. By contrast, after accounting for these income support payments, households earning under $60,000 a year, which is just under half of all households, will pay no net income tax at all. That's because the $2.5 billion of income tax they are expected to pay this year will be more than offset by the $7.3 billion they will receive in income support.
Supplementary question, Dr. Jian.
Thank you, Mr. Speaker. What reports has he received on a proposal for an additional capital gain tax in New Zealand?
Speaker, on behalf of the Minister of Finance.
Dr. Jonathan Coleman.
It's worth noting that investors buying and selling assets for the purpose of making a profit are already taxed on their gains. I've seen reports about a proposal for an additional capital gains tax that would apply to every business and every farm in New Zealand, but only a quarter of the housing market. It would be full of exemptions for things like the family home, personal assets, collectibles, small business assets sold for retirement, and payments from retirement savings schemes. However, nowhere does the documentation supporting this policy set out exemptions for KiwiSaver funds, which currently don't pay tax on capital gains on gains made from trading New Zealand-listed shares and most Australian shares. In fact, one of the architects of this proposal has said, in quotes, in circumstances...
Order. That answer is now getting substantially too long. Supplementary question, Dr. David Parker. Honourable David Parker.
Thank you, Mr. Speaker. Prescient again.
Well.
Prescient again. Mr. Speaker, in the Minister's answer to the second last supplementary question, when he was talking about tax rates paid, income tax rates, is it correct that he did not include either GST or capital gains in respect of the income earned by the wealthy?
Honourable Dr. Jonathan.
Well, what I can say is the so-called wealthy, as outlined in that answer, are paying more than their fair share of tax. And I refer you to Bill English's press release of the 28th of May, which lays out the case very clearly.
Point of order. Honourable David Parker.
Thank you, Mr. Speaker. We've had very long answers, but that did not... Well, Mr. Speaker, with respect, Mr. Speaker, the length of the answers that we've had from the Minister would give him room, you would have thought, to address the issues that I raised. Mr. Speaker, I asked him whether his answer included GST or capital gains, and he hasn't even attempted to address...
So the point of order effectively is that the question hasn't been addressed. The difficulty was, again, not only the length of the answer, but the length of the question. The question was, did the figures earlier that the Minister used include GST and capital gains? And if that could be addressed, then we could move forward. Honourable... Order. No, I've got a point of order here, I think.
No, supplementary.
No, well, I'm waiting for the answer. I'm waiting for Dr. Jonathan Coleman to answer the question that was asked by...
The point is, we're talking about income tax. Now, obviously, GST is paid on objects or services, goods and services, which are discretionary. But the bottom line is, those people in the so-called wealthy section of the population pay much more than their share of GST as an overall proportion.
Supplementary. Order. Supplementary question, Honourable Jerry Brownlee.
Mr. Speaker, to the Minister, has he seen any reports on how taxation policy may adversely affect KiwiSaver savings?
Honourable Dr.
I have seen a concerning report, a letter that David Cunliffe wrote to the Shareholders Association back in 2011, in which he said, in circumstances in which there would currently be no tax payable on capital gains, the 15% capital gains tax would tend to apply. And he was talking there about KiwiSaver funds. The 2.3 million New Zealanders in KiwiSaver will be very concerned about that written admission to their Shareholders Association by one David Cunliffe.
Question number 2, Right Honourable Winston Peters.
Mr. Speaker, my question is to the Minister of Internal Affairs and asks, on what basis was the recall and